Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. It is November 9th, and I hope you guys got some great plans for the weekend here. Right now, we'll start off with a couple economic news. We'll start with the PPI, or Producer Price Index. This is an index that kind of gauges the inflation on the wholesale side of things. It has some importance, but not as big of an importance as your CPI and your PCE, primarily because on the wholesale side of things, whether they lose profit or gains, it doesn't always get translated to the consumer. So they don't always pass on those savings or losses to the consumer. And that's what we really look at. So that's why the CPI and PCE is a little bit more important in terms of what we look at. And speaking of such, we'll get the CPI number out next week, next on Wednesday, actually. So let's kind of jump into this. In September, we had a 0.2% increase for the PPI. It forecast we thought would be that same trajectory at 0.2%, and it jumped up a lot more at 0.6, so it was a pretty hot number there. Now, if you strip out the food and energy, we get what they call the core PPI, and that's primarily because it's not a controlled variable by having the food and energy. By stripping that out, we got more of a controlled number to look at because there's so much volatility in terms of food and energy. So in September, again, kind of like the headline number, we had the same pattern. We had a 0.2% increase. Forecast supposed to be 0.2, and it jumped up 0.5% for the month of October here. So, and that's really the reason behind that is because food and energy actually dropped a little bit in September. Now let's kind of move on here. Consumer sentiment, as you can see, had a slight drop. So in October, we had a 98.6 on the index level. It's supposed to have dropped down to 98.2, but it dropped to kind of within range, 98.3. So it had a slight decrease here in sentiment. Last but not least, we got the wholesale inventories. So in the month of August, we had a 0.3% increase. We thought it would be in that same uh, projection at 0.3%, and it came in at 0.4%, a little bit hotter there. So this is pretty good because wholesale inventories are increasing, which will be they wouldn't increase if they didn't think they're going to be moving that inventory. So this is obviously a good sign here. Consumer sentiment, even though it had a slight drop, it's still within range and still in a good range here. Obviously, we want to keep an eye on the inflation number, even though this isn't as important. We want to keep an eye on it because next week at the CPI, and we'll see how the CPI fared, if it had a big spike in October or if it's or still in line a little bit more, so it doesn't get inflation doesn't go out of control. And that's kind of why the Fed does their rate hikes to keep control of the rate hikes, so we don't have a high inflation. Or I'm sorry, keep control of inflation so it doesn't get out of control. So far, the stock market is down after a couple of big days here. Of course, we got some Q3 earnings, not a whole lot that's really affecting the markets. Yesterday's FOMC announcement, nothing new, really, to be honest. They basically left the rates on high, gave a strong indication they're going to raise it again in December. Projections, again, are about 3 rate hikes in 2019. Now, those ones could be anyone's guess as to when exactly they're going to do it, because typically there can be assume that they'll be done at the an announcement when they have press coverage, and those are usually on a quarterly basis. But now the Fed wants to be more transparent, so after every FOMC meeting, they're going to have press coverage. So it could be at any given time of those that they could do it. So again, that would be kind of waiting and see. So now that the elections are kind of over, the investors are kind of looking at, of course, they're kind of still studying as to how this is going to play out with policy. But they're also kind of looking at, they have some concerns about China, whether if it's the U.S. and China's trade they're kind of concerned about, but also China's been showing some economic indicators showing that it's slowing down a bit, like auto sales over the last 12 months have been down 12%. And there's some concern about, China's economic health there. Then you also got stuff going on in Europe with the UK with their Brexit negotiations with the EU, and you got negotiations going on between the EU and Italy and their budget. So you got a lot of questions there, and of course, anytime there's uncertainty, it makes the investors a little nervous, and sometimes we'll get knee-jerk reactions in the markets here. So let's kind of move on here and see how this is affecting the bond market. Bond market's still much better today. This shows a big drop, but if you listen to yesterday's report, I'd indicated that at the end of the day there will be a bond rollover. So what that is, it's a reset in the bond market because The bonds every 30 years, we have to start at some point a new 30-year period. So we get these rollovers, and on the graph, it looks like you can see the changes, but on pricing and rate sheets, there's no price changes. So don't be worried about any price worsening because we didn't do it. So put us right up on the floor of support here. Yesterday, it was about 14 basis points. Shows of a loss for the day for the for the bond rollover. So, but today so far we are currently up about 20 basis points. I've been kind of touching up a little bit, like 22 basis points, which will lead lenders to give us a little bit better pricing today as a result of this. And of course, as you can see, we're getting kind of towards this middle area here. So we got room up towards the upside here to the 25-day moving average, and we got a little bit of room here at the floor, but we got more room to the upside, so we could continue to see some improvement in the markets here before we get any resistance. So that's a good thing. And of course, the stochastic show is in a sold position here as we're below this red line here. Yield, same thing. It's going up against its floor of support, which has been pretty strong. We're holding at 319. Its next level is coming up there, so we'll get a double floor of support here to help it out if it doesn't break below it. And it'll only support that even further, boost it further. As you can see here, it's kind of in stochastic kind of shows it in over bought position, so this has room to come down further as well. So rates are have a little bit of improvement today, and that's kind of the whole point of this. If you guys want to get any more updates throughout the day, just come over to it. You can find me at Mike Bjork. Otherwise, I hope you guys have a great day, great rest of your weekend, and we'll see you guys on Tuesday, as Monday will be celebrated as a Veterans Day. And also say thank you to all our vets that are out there. Again, thanks again for watching. We'll see you guys on Tuesday. Bye-bye.